Hey, welcome to Thinking is Contagious. We're going to take a different route today. I'm going to talk a little bit about the financial markets. Um, I've been in the stock market for decades, probably 3 decades. Really, the last couple of years, I've really been in the market. I've learned from my mistakes. There's no shortcuts. There's no easy way to invest in the market. Um, don't trust that other people are going to do better than you, invest better than you. That doesn't mean that you don't invest in other people. That means research and find out who's telling you to invest in what. The stock market and all the financial markets are heavily manipulated by people who throw hundreds of billions, if not trillions of dollars into that manipulation. You've got to learn that if you try to fight that manipulation, you're going to lose. Now, within that manipulation, there's opportunity, there's momentum, there's stocks that you can see and equities that you can see. You get a lot of backing, there's a lot of force behind them, there's a lot of volume, and you can do those as trades. But what is investing today is very tricky. And what is investing today, what I have learned, the best way to invest is learn and know the product and the company, and very importantly, know who the jockey is on that horse. Know who the CEO is, know who the board is, know who the investors are, know who owns the stock, the majority of stocks, institutions, not institutions, what type of institutions. Know, do your research and learn. And more than anything else, test the product. Look at the product. Understand the product. And if it's something that you like and your friends like and everyone you talk to seems to speak well about the product, it's probably something that is going to do well. Also look at the sector and the technology involved, the realm in which they operate, the type of business, their industry. I will tell you this, static business as usual is going to lose out to disruptive technologies. The banks are going to lose out to the fintechs, no doubt about it. The CRISPR technology in the genomic field is going to beat out that big pharma type of concept. Know what you're investing in and know who you're investing in. Those are critical points for success, long-term success. Now, there are trades. Trades are different. Trades are, something gets hot, you're following it, and you really have to follow it to understand, looking at volumes, looking at when people buy in, when the biggest volumes were, create a base and react off of that and watch as the momentum goes. And most importantly, a couple of things. One thing that Buffett said, be afraid when everyone is euphoric and be euphoric when everyone's afraid. In other words, buy when everyone is selling, sell when everyone is buying. The stock market is the vehicle by which the patient get the capital and money of the impatient. It's transferred. Capital is transferred from the impatient to the patient. That's the stock market. So investing is long-term. Investing is understanding what you're investing in. But remember what I said at the beginning, it's also very manipulated. Let me show you the examples. Earlier this year, the big talk, first quarter, was interest rates are going up, get out of tech, get into the cyclicals, get into the value, get out of tech. And guess what? It worked. They destroyed not destroyed, but they brought a lot of tech companies down 25, 30, 40% in some cases in a very short period of time. Look at what happened to Zoom Video as an example. Was it ahead of itself? Yes, but the pressure to get it quickly down to a number that was acceptable to Wall Street was excessive and manipulative, and it was an agenda-driven narrative. What happened is the 30-year Wall Street veterans 2 years ago were saying, you're crazy to buy Tesla. You're crazy to buy Teladoc. You're crazy to buy Zoom. You're crazy to buy Okta, Twilio. You're crazy to buy Square. You're crazy to buy PayPal. You're crazy to buy anything because they looked at the old formula, the valuations, the ratios, the PE ratios, and they told you, don't buy that. They told you, buy IBM, buy GE, buy Acme, buy AT&T, buy Bristol Myers, buy Pfizer, buy Gilead, buy Exxon, buy Chevron. That's what these experts were telling you because they said they have balance sheets in the long term. We're going to come out ahead and you're going to outperform. And these other things are fads. And guess what? They were like somebody driving a 40 horsepower Volkswagen bus racing against a guy in a Ferrari or a guy in a Corvette Z06. Okay? What happened? They were passed by. They missed the boat. They stayed with their stoic, flat investments. And everything they said that was wrong and that was going to blow up, guess what? Yeah, it blew up. It blew up in the bank accounts of the people who invested in it. So what did Wall Street do? They said, you know what? We missed the boat. It's obvious we're in inning one of a technological revolution that will dwarf any other industrial revolutions this country's ever had. We missed the boat 2 years ago. We're never going to get valuations. We're never going to get stock prices back to what they were 2 years ago. You know, we're not going to buy Zoom at $30, but we can buy it at $150. Let's get the narrative out there that interest rates are going to run away, get very high. Let's point at the 10-year Treasury. Let's do everything that we need to do to force that 10-year Treasury yield up, which is what was done, and float the narrative out on the street that it's time to get out of tech because those valuations, those 40, 50, 60 times sales valuations, they're never going to grow into that projected value, share value. And it's time to get out because now you can get 1.7% on a 10-year Treasury. Now you can get out because you can get over 2% on a 30-year Treasury. Now you can get out because you can get more than 1% on a CD. And guess what? A lot of the institutional money decided that they were going to do that. And they got out. And the very people who floated this narrative, the guy driving the Volkswagen bus who watched the Corvette pass him by, jumped in with both feet, both hands, and emptied his wallet and started buying those tech stocks because they know that what's coming out the other side, when this is all said and done, and we're in inning one of a 9-inning game, like I said, but when we get to the 7th, 8th, and 9th inning, what's coming on the other side is disruptive technologies, not the stoic, slow-moving Volkswagen bus that they were driving. The same people who told you to invest in Bristol Myers and in Squibb and to invest in Gilead and Pfizer and to invest in Exxon and Mobil and Philip Morris and IBM. Although IBM today, great buy. I am heavily invested in IBM. I think any pullbacks in that 130 range is a buy opportunity. I love the stock. I love what they're doing. They've changed their game plan. They are going into the technological future. But having said that, these Volkswagen drivers have filled the boat and they have floated their narrative. Why do I think that? Why did I never believe a word of it and never? What I did was I actually doubled down. I added more to my ARK ETF funds, is because you expect me to believe that the person that's buying Tesla, that the person that's buying Roku TV, that the person that's buying Zoom is going to say, you know what, I'm going to sell my Tesla because I can get 1.7% on a 10-year treasury now. Let me hurry up and liquidate and buy those treasuries. No, no. People, the same way the politicians have duped you, Wall Street dupes us the same way. If you are a long-term investor, technology is where you need to be. Stock picking is of critical importance. Not everyone's going to come out the other side. I am not a financial advisor. I am not recommending what you should or shouldn't do, but I am recommending that you research, investigate, and study. Look at things like the ARK ETFs, what they're investing in, what their strategies are, and decide what you want to do. On the same vein, this week, first week of April, what we're seeing is that same Volkswagen bus driver that got passed by the Corvette. And I say Corvette because, I love Corvettes. So that's the best value stock in the world is a Corvette. But anyway, that same Volkswagen bus driver that's been passed by, guess where he was passed by? Not in a Corvette, but in a supersonic rocket ship, was with cryptocurrency and specifically Bitcoin. Warren Buffett told you that it was voodoo. Main Street, Wall Street told you that it was going to end in tears, going to be ugly. Well, today you have MassMutual, one of the most conservative institutions in the world, investing a couple of $100 million in Bitcoin. You have the Sacramento Kings basketball and the NBA offering to pay some of their players in Bitcoin. You have Tesla accepting Bitcoin for their automobiles. You have Square, PayPal. You have Visa, all accepting Bitcoin. You have Bitcoin soaring. So guess what? That Volkswagen bus driver said, again, we were wrong. Again, we missed the boat. This thing is not a fad. This thing is not going to crash. We got to bring this thing back down because we don't want to buy at market. We need to buy at a discount. We're never going to get it back to $5,000 a Bitcoin or $10,000 or $15,000, but let's get it to $40,000 a Bitcoin because it's going to 100 this year. That's what I think. That's my opinion. That it's going somewhere between $80,000 to $100,000 this year. So what did they do? They said, regulation. Janet Yellen, the shill, the paid-for politician, although she's not supposed to be political, but they're all paid for, bought and paid for. Regulation. Bitcoin is what's used by the drug dealers. How ridiculous. Dollars are used by drug dealers. The US dollar is used by the drug dealers as well. I guarantee you more transactions in drugs go down in dollars than they do in Bitcoin. The narrative was Bitcoin is for drug dealers. We are going to look into regulating it. The IRS is going to come after you. It's not treated. It's not treated as a stock. It's not treated as a commodity. It's treated as a commodity. You're going to be taxed on it. You're not going to be taxed on it unless you sell it for a profit. If you just hold it there, you're not. And 60% of Bitcoin has never left its original owner. So those are all false narratives in an attempt to drive Bitcoin down. And it hasn't really worked. This week they're trying a new one. And this really tells me why I say look into Bitcoin. It's going to go through the roof. I myself don't own Bitcoin. Complete disclosure, I do own the miners. I think that's the best way to play it. Because the miners allow me more leverage. And that's how I view it, and I've done well with it. I play the miners, the Bitcoin miners. Now, here's the new one. And this is really proof positive of why you need to be in this industry. China is now the threat because they're going to start their own cryptocurrency. Imagine that. That's going to be a threat to Bitcoin. The whole The whole world, when there's problems, when the earth is shaking, what do people do? They run to the US dollar. I don't see them run to the Chinese currency. I don't see them run to franc or the mark or the pound, sterling. I don't see any of that. They run to the dollar. Now they're trying to tell me that this is a real argument. China issuing a cryptocurrency is going to hurt Bitcoin because people are going to buy the Chinese-backed, government-backed cryptocurrency. Who is going to buy Chinese-backed anything? They are corrupt criminals, crooked. Who's going to give their money to the Chinese government? Who's going to flood into the Chinese cryptocurrency? Are you serious? Again, manipulation, driving their Volkswagen. They missed the boat. And by the way, when I say Volkswagen bus, I am not making fun of Volkswagen. I think it's a great product. I think that they are going to make a lot of noise in the EV world. But I'm just saying it as far as, horsepower and performance and things like that. So that's the comparison. But that's what they're telling you now. That's the same as interest rates to drive down technology so they can get into it. That is the same as Bitcoin. We missed the bus. Warren Buffett is even coming around now. Even Warren Buffett, the great oracle, who, by the way, in my opinion, he was the great oracle. He's not the great oracle anymore. Even Warren Buffett is coming around on Bitcoin. Jamie Dimon is coming around on everybody, all the institutions, the major banks, coming around on Bitcoin. Just like fintech is going to take out the banks. There's absolutely no doubt about it. People look into technology, disruptive technologies. Look at who the jockey is. The horse is important. The jockey is more important, in my opinion. Feel free to contact me if you want about some of these observations and what I'm doing, not doing. Like I said, I'm not a financial planner. I am not giving you financial advice. I am not telling you how to invest your money. I'm telling you what I'm doing, and I'm telling you that I am open to share my views and what I'm doing with you. So hope you enjoyed this. I hope you can spread it around. I hope that we can increase the subscribers. Hit the subscribe button if you like this one. Give me some feedback if you like this. Trying to go a little bit away from the politics and see if it works. But nonetheless, I'm always going to be there on the political side as well. I feel that we need to take control of our destiny, but our financial destiny is also part of what we need to take control. Thank you and have a good day.